Welcome to the 73rd episode of Kanga Crypto News, your destination for quick and reliable updates from the world of crypto. I am Kuba, here with the latest and most important stories. Before we get going, a quick reminder. Every edition of Kanga Crypto News is prepared by our expert Kanga analysts using trustworthy sources only. However, this is not an investment advice. We publish new episodes every Friday. If you want to stay on top of the most crucial developments in crypto, subscribe to the channel and hit the notification bell so you never miss an important update. Now, let's get started. Let's start with derivatives because Cboe wants to change the game. The exchange announced plans for 10-year Bitcoin and Ether futures, scheduled to launch November 10th, pending regulatory approval. These continuous futures are designed to mimic perpetual swaps popular on offshore platforms, but with US regulatory oversight. Instead of rolling contracts every few months, traders get a decade-long exposure with daily funding adjustments tied to the spot prices. Cboe says it bridges traditional finance with crypto and expects both institutional and retail demand. If approved, it could mark a big shift in how US markets handle long-term digital asset bets. Over in Washington, Trump's crypto team is stepping on the gas. Patrick Witt, the new executive director of the President's Council of Advisors on Digital Assets, laid out his three top priorities: passing the Senate's market structure bill, spinning up implementation of the Genius stablecoin law, and setting up a federal Bitcoin strategic reserve. Witt dismissed conflict of interest concerns about Trump's own crypto stakes and argued this was about strengthening America's economy. The administration also wants Congress to codify the Bitcoin reserve into law, starting with seized BTC. Witt hinted at creative ways to keep growing it. The message was clear: policy momentum isn't slowing down. Meanwhile, Nasdaq is buying into the crypto future, literally. The exchange operator is investing $50 million into Gemini's IPO this week, securing a private placement right after shares start trading. Gemini, funded by the Winklevii twins, aims for a $2.3 billion valuation under ticker GEMI. Beyond equity, Nasdaq will custody and stake crypto through Gemini and partner on collateral management services for institutional clients. With the SEC under Trump-appointed Chair Paul Atkins taking a friendlier stance, Nasdaq is doubling down on crypto infrastructure. Gemini's listing joins a wave of fintech IPOs, including Klarna and blockchain lender Figure, underscoring renewed appetite for digital finance in public markets. Back to corporate treasuries, Michael Saylor's strategy just added another $220 million worth of Bitcoin, buying 2,000 BTC at an average price of around $111,000. That pushes holdings to 638,000 Bitcoins, worth more than $70 billion at today's prices. Funded through ongoing stock sale programs, the move shows Saylor isn't flinching at six-figure levels. Analysts say it signals confidence in new highs ahead. Meanwhile, Bloomberg added Saylor to its billionaires index with a $7.3 billion net worth. Love or hate the approach, strategy's relentless accumulation keeps tightening supply, and markets take note. Speaking of tightening, Solana is flexing on every front. Sol hit $219 mark as forward industries raised a record $1.65 billion in cash and stablecoins for a Solana treasury backed by Galaxy Digital, Jump Crypto, and Multicoin. Shares of Forward spiked 128% on the news. On top of that, Solana Strategies just got approval to list on Nasdaq under ticker STKE, a first for a Solana treasury. Galaxy also tokenized its SEC-registered shares on Solana, moving real-world assets further on-chain. Trading volumes and TVL keep rising, while Gemini expanded Solana staking and USDC perpetuals in Europe under MiCA rules. The ecosystem market cap hit $283 billion. For Solana bulls, it was a week to remember. Japan's Metaplanet is making its own headlines with a mega raise. Tokyo-listed firm closed a $1.4 billion international offering after demand nearly doubled expectations. Of that, $1.2 billion will go directly into Bitcoin buys over the next 2 months, tripling down on its treasury pivot. Already holding 20k BTC worth $2.2 billion, Metaplanet is now Asia's largest corporate Bitcoin holder and second globally after Strategy. Unlike some firms retreating from crypto exposure, Metaplanet is pushing harder, even trading BTC options for profit and planning to inject billions more into income strategies. This isn't a hedge anymore, it's a new playbook. ETF land is heating up too. Grayscale filed to convert its Litecoin and Bitcoin Cash trusts into ETFs and launched a fresh Hedera ETF filing with Nasdaq. If approved, BCH would get its first US ETF listing administered by BNY Mellon with Coinbase as custodian. The Hedera product, still awaiting the SEC's decision, faces a November 12th deadline, right alongside rival filing from Canary. Grayscale has also applied for a Chainlink ETF earlier this week. After getting the green light on Bitcoin and Ethereum products, the firm is betting regulators are ready to broaden the menu. Investors may soon have ETFs tracking BCH, LTC, HBAR, and Link. On the regulatory front, SEC Chair Paul Atkins rolled out the spring 2025 agenda, promising greater certainty for crypto markets. The plan focuses on simplifying compliance, easing capital formation, and updating securities rules to fit digital assets. Crucially, SEC and CFTC also issued a joint statement allowing registered exchanges to list certain spot crypto products. This marks a break from the enforcement-heavy Gensler era, signaling a more collaborative approach. Initiatives like Project Crypto and the CFTC's Crypto Sprint are reshaping the landscape, with regulators inviting public input, especially from smaller crypto firms. America wants to be a hub, and this is the friendliest stance in years. Finally, back to price predictions. Tom Lee told CNBC that Bitcoin could hit $200,000 by year-end 2025, hinging on Fed policy. With a September 17 meeting looming, analysts expect a 0.5% rate cut after weak jobs data. Lee argues that looser liquidity could supercharge Bitcoin and Ethereum, which are historically sensitive to rates. At press time, BTC traded at $112,000, already up massively since June when it overtook Alphabet in market cap. Other forecasters, from Bitwise CIO Matt Huggan to Robert Kiyosaki, are echoing the $180,000 to $200,000 range. Lee has missed targets before, but if the Fed cuts, the market could be lining up for another explosive run. That's all for today's Kanga Crypto News. If you enjoyed the video, give it a thumbs up, share and subscribe to stay updated with all the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.